right, everyone, this is Vishal from Equity Guru, and welcome to Chart Attack. And today we're going to talk about the stock market crash, or some people might be saying, it's time to buy the dip here. So we're going to take a look at the technical charts, see what's coming down the pipeline. On the day I'm recording, on the 10th of May, you can see here a bit of a mixed market here. The NASDAQ closed up nearly 1%. The Dow is the only red there for the day, but you can see the intraday choppiness, bit of a range for quite a few hours, for a couple of hours before we get that takeoff. And then we got a sell-off sort of near the end of the day, and the S&P 500 just a few pips away from actually being flat for the day. Big day tomorrow, or today actually, because the video is coming out today on the 11th. So big day with the April Consumer Price Index report, the CPI number. If you recall, last month's CPI came in at 8.5%. And already here, we're getting this headline from CNBC saying that, hey, the number is supposed to be a bit lower and will also indicate that the inflation is already peaking and we're going to be seeing inflation drop. Why is this, of course, a big story? It goes back to the fact the Fed raising interest rates, the market determining whether the Fed will be able to raise interest rates enough to combat the inflation. Of course, right now, a lot of people are thinking that the transitory inflation will magically sort of disappear and the Fed will be slowly hiking rates and we will, the inflation will get back at their 2% threshold. I've sort of done a different take on it, maybe a classical economics take, talking about the monetary inflation and the non-monetary inflation. On the 25th of April, I did write this article on the stock market sell-off explained. Give it a read because all of this is still relevant, even though it's about a week old. We talked about the S&P 500 as well, a technical level that had to hold. And clearly, when you look at the charts, which we'll talk about in just a second, we did break below that 4150 zone that I called. And you can see that beautiful reversal structure that we look for. And then I wrote this on the 2nd of May, is the Fed about to crash the stock market? It's right when we confirmed our weekly candle close. So a lot of stuff to read, but I think it's still all relevant compared to what's coming. And you can sort of see what I think is coming with this head and shoulder pattern, or the skeleton that we're going to apply basically on the weekly charts of all the major indices here. So the S&P 500 with that head and shoulder reversal pattern structure, which we haven't seen on the weekly chart since 2007, and we all know what happened there. So what I'm looking for is essentially further drop lower, maybe even to 3,800. And I know there's also a lot of people looking at the 33 or 3,400 zone, much lower here. That's going to get people a bit worried, of course. But I'm looking at 3,800, and there's a few things that a few ways I'm approaching this. Essentially, 4,150, that was that magic level that we looked at on the weekly chart. That is our current resistance zone right now. As long as the S&P 500 remains below 4,150 on the weekly chart, I expect the downtrend to continue. And we're seeing today this large doji candle. So there is a chance that the stock market might pop up a bit. But I think once we hit 4,150, we'll probably see some sellers step back in, and we do come back lower to the 3,800 zone that I'm targeting. In the, I don't want to say long term, but I think we might even hit that maybe in the medium term. And of course, if we see the opposite and price closes back above 4,150, and especially on the Friday, that means, we are above 4,150 by the end of the week, and the weekly close closes back above 4,150. In technical terms, the reversal pattern here has been nullified and is over. And then we are looking at basically higher markets once again. So right now, we are still in a downtrend, still in a bear market here. And I think there's still some room to the downside to go. Quick little look at the NASDAQ, which actually is at my first target here at around 12,250. So we'll see if the NASDAQ can get a bit of a bounce and climb back above 13,000 here on the NASDAQ. But I think, you know, if we do make that one leg lower, we are probably heading to 11,000. And as you guys know, with the tech stocks, if interest rates are going to rise, a lot of these growth stocks tend to do really, really poorly. So there might be some more room lower for the NASDAQ. If we take a look at the Dow Jones, you know, it hasn't actually really broken below the major support on the weekly just yet. And it might be doing so by the end of this week. Maybe the Dow Jones is going to join. And I'm looking at the 30,000 level here if we make another leg lower. More importantly, the chart that I've been watching, and I've mentioned on the Discord and on all our articles, is this chart on the small caps, the Russell 2000. And I've mentioned this chart because it is generally the leading indicator. This indice, or this index, sorry, it leads the major indices. So I still see some room to the downside here on the Russell 2000. Some people are looking at a support level that we might have touched here just recently at 1740. But again, folks, you know, when you see a big downtrend like this, it's trying to catch a falling knife. And you can see here that perfect retest that we've had when we tried to climb back above 1940, and then we continued lower. So if we are going to turn positive again on the markets, we want to see the Russell 2000 close back above this 1940, 1950 zone structurally. So all these markets are still looking quite bearish, to be honest. We'll see what comes out with the consumer price index, if that's going to change people's expectations on how many rate hikes the Fed is going to pull off. Some more controversy today with the Fed saying that, hey, you know, we might have to hike a bit slower because if we hike too fast, we might cause a recession. And as you guys know, Q1 2022, the US economy shrank. So if we see another negative report for Q2, the US economy is officially in a recession, and the Fed will probably have to cut interest rates to try to get the economy to speed up and people spending money. So a lot of things going on, but just looking at the charts from a technical perspective, the downtrend is still the strong trend right now. And I think we still have these pullbacks and we still have some more room lower. But again, that 4150 on the S&P 500 and all the other levels that I discussed on the NASDAQ and the Dow Jones and the Russell are the zones that you should be keeping on your charts. And especially, you know, this weekly chart with that head and shoulder pattern, because we could expect a target much, much lower. That's it for me, folks. If you enjoyed the video, give it a thumbs up. Let me know in the comments below if you guys think this is the top of the market or if we are still going to make new record highs. And if you are indeed buying the dip, I'd really like to know in the comments below. And I'll catch you guys all in the next chart attack video.